Good morning, everybody. Thanks very much for joining us. For those who don't know me, my name is Richard Betts. I'm the publisher at Real Asset Media. We produce magazines, newsletters, so we have the Real Asset Day, but we also have Real Asset Insight magazine and Real Asset Impact magazine, and Impact looks much more at the sort of ESG, social impact side. And for those of you going to Expo Boreal, we also run the International Investors Lounge, which is in Hall A1, and we run a whole program there on all 3 days focused on the hot topics and also the key sectors there. Thanks very much for joining us here in person and also online. If you've got any questions here in the room, do feel free to ask them, and if they're online, just put a note in the Q&A and I'll make sure we ask those. We're going to be focusing today on the Netherlands market. Huge amount has happened obviously over the last kind of 6 to 12 months, and so it's going to be really interesting just to unpick what's happening there and also see where we're heading, I suppose, in the market, particular challenges, but also key for us as well here, the opportunities. Thanks very much to Schroders for hosting. I'm very aware, I'm very pleased that they have hosted. I'm very aware that this is the only event that's happening in Schroders this week because of the death of Elizabeth II, the Queen. And I know that there's a big focus here on the memorial here, and thanks to the Queen for her service. And I also just wanted to share that from the perspective of Real Asset Media, and I'm sure all the speakers as well. So that's brief introductions. Let's start with the panel. So Simone, maybe just a quick introduction, and then we'll work our way down. Simone.
Yep, sure. I'm Simone. I'm basically a Dutch lawyer. Work for Greenberg, Traurig, which is a global law firm. I live and work in London, but I focus on the Dutch market. And I'm just here in London to build my relationships with every client and to extend that while focusing on the Dutch market. So that's me.
Great, and you're obviously seeing both sides of the trade in a way as well, which is interesting.
Yeah.
Rogier.
Yes, good morning, Richard. I'm Rogier. I'm heading the Amsterdam branch for Berlin Hub. I tend to believe that we are the most active commercial real estate lender in the Netherlands, which is not originally from the Netherlands. We have a portfolio spread over all asset classes, and looking forward still to expand that.
Great, Pieter.
Yes, my name is Pieter Akkerman. I'm a co-head of Schroders Capital Real Estate in the Netherlands since February this year, when Schroders took over the Cairn Real Estate platform. We manage a portfolio of a little bit less than 2 billion in the Netherlands in all sectors of the real estate market. So.
Great, James.
Yes, so my name is James Farmer. I'm a partner at Boreal, and I'm kind of conscious a lot of you don't know who Boreal is yet, since we're quite new. We were founded in February with my partners, Louis Simon Ferland, Pete Bingle, and Nikos Schroders. We have a team of 17 here in London, with an office in Paris as well. We're servicing a mandate with Cadillac Fairview Europe, who are part of Ontario Teachers' Pension Plan, to build out a 3 billion logistics portfolio on a pan-European basis, including UK. We've invested around 500 million to date, of which half has gone into the Dutch logistics market.
Great, thanks very much. Maybe just starting with you, Pieter. Obviously we're moving into the autumn now. Huge changes over the last 6 months, particularly. Interest rates, but also Ukraine war. We've almost forgotten COVID, although I'm sure that's going to be returning at some point for us. I suppose, what's been the impact on the market, and how would you characterize it at the moment?
Well, I think we clearly see that somehow it's a perfect storm, because it's inflation, it's interest rates, it's higher construction costs, looming recession, Ukraine. So there is, quite some impact on the markets, obviously. Also depending, not every sector is harmed as much as the other, but we clearly see rising yields and processes that are being stopped, especially in the Netherlands in residential. We will probably discuss that a little bit later, but so there is quite some impact on the market already to be seen. Yes.
Okay, good. Might be interesting to pick up with you, James, just in terms of what you're seeing there from a capital point of view as well. Particularly, you're looking across Europe as well. So what are you seeing? How are you seeing the Dutch market within that context?
Look, obviously we're focused very much on the logistics market. And look, as kind of we're saying, the sort of macroeconomic risk at the moment is quite high. I mean, there's lots going on, lots of risk in terms of the geopolitics as well. I mean, look, we made a very early pivot away from, I guess, the sort of long income bond style investments to sort of more shorter term, higher growth and fully indexed income, which, you know, is a good way to defend values. And I think, you know, whilst the market is certainly weakening, look at where we were 6 months ago, yields have moved out a long way. At the same time, you know, we're in the logistics sector, which is still fundamentally, very, very strong. So on one hand, you've got a very weak capital market environment, potentially. A lot of your levers and your cash flow are very, very difficult to kind of predict where they're going to land, where a yield's going to land, who knows. Inflation, interest rates all moving around at the moment. But at the same time, you have, rent growth, take-up is super strong in logistics. So it's very, very, very difficult to find the balance. And I think, look, Netherlands is very, very well positioned to sustain any sort of macro challenges. GDP is still growing in Netherlands, which is good. Compare that to UK, which looks a bit healthier. So look, I mean, all in all, I think the fundamentals are still very, very positive for Netherlands.
Okay, good. And Rogier, it might be interesting to pick up with you some of the things around interest rate rises. I mean, obviously everybody was sort of hoping for more. I mean, in all the events that we had pre-summer, everybody was hoping that there would be significantly more clarity as we came through the summer. There is a bit more clarity on interest rates and certainly direction of that. But I suppose, what are you looking at and how's that impacting the financing side?
The latter a lot. The ECB has clearly said its priority to get inflation under control, and following the Fed, it's of course very, very likely that they will continue doing that. We tend all to think, and the market thinks, when you look at swap rates, that these increases have already been priced in. Having said that, we have been thinking that for quite a while now, and we have proven to be wrong. So let's say the short-term tendency is still upward. This, of course, sets a lot of our financing confidence under pressure, and this is especially, for example, when it comes to logistics, where we have seen amazingly low yields, even though the fundamentals are still very strong. When net yields are lower than the long-term interest rates, it's starting to become a little bit exciting. So following these interest increases, we have also seen a slowdown of the market clearly. We have been confronted with chipping already actually since January. Transactions have been progressing, even though they were transacted a little bit slower. And at the moment, it's not yet a standstill, but it's definitely less than it is normally in the third quarter.
Because that's interesting. So you've been seeing price renegotiation kind of discussions from January, so even pre the sort of Russian invasion of Ukraine, as it were.
Yeah, well, we have seen a very positive trend between 2011 and 2020. And many investors have, of course, been enjoying that. But, of course, a slowdown already started earlier. Interest increased earlier, of course, than the Ukrainian war. And we have all been waiting for, let's say, the trigger to end the bull market. And we seem to have found that now.
Okay, good. And you're seeing that, through the transactions, I guess, Simone. Did you see a kind of similar slowdown? Are we looking at more of a pickup now as we come into the second half? Because obviously there'll be investors that will be looking to invest before the year end, for example. So I suppose, are you seeing any signs in the transactions that you're seeing?
Well, it's still quite busy, and also in the legal environment there are some developments that could have an impact on the real estate market. Next Tuesday we have budget day, and then the government will present its fiscal plans for next year. And one of the measures that they want to introduce is an increase of the real estate transfer tax. We already saw an increase from 6 to 8%, and now they are planning to increase it even more to 10.1%. So we believe that although there is an interest rate that is increasing, that there will be many parties that want to sell their real estate before the end of the year.
And was that what happened when it moved from 6 to 8%? Was there a similar kind of sell-off? So,
Yes.
Okay, that's interesting. Peter, what kind of effect will that have? I mean, will that then be seen as a buying opportunity for somebody else, or what did we learn when before it moved from 6 to 8? If we're going to see it moving from 8 to 10?
Well, obviously, I mean, it all depends on, I think, the broader perspective of the market. Like we just discussed all the other aspects. But this may have some impact if and when certain parties decide to invest in the Netherlands. Obviously, it's better to do that before the 31st of December. So we will probably see some pressure there. At the same time, currently I think there are more parties that are in a selling mode. So let's see how that works out. Because, for example, in the office market, there's quite some processes that are being brought to the market, but the demand is significantly less than 6 months ago. So it's going to be interesting how that will all be taken up or not. So.
Okay, good. And James, looking at the capital side, you're obviously representing different capital coming into the market. Mm-hmm. I suppose, is there now an advantage? Given the change in the sort of financing side, is there more of an advantage for straightforward equity? For example, what sort of strategy are you using? Are you buying with equity and then bringing debt in on the backside? What's the sort of kind of favoured route for capital at the moment?
Yeah, I mean, good question. I mean, we typically close with equity and finance later, but either way, you need to finance. So whether you do that or finance straight up. So. Look, the sort of blow up in financing rates made a big difference to the market. Yields, at least in the prime end for rented incomes, moved from 3% to probably 4% in the space of 6 months. And looking at where swaps are going, probably has another 25 or 50 bips to move. Let's see. And I think what we've seen in the market at the moment is a definite slowdown, as everyone knows. A lot of the kind of higher levered US, platforms are sort of out at the moment, or certainly a lot quieter. What we're seeing at the market is, we're certainly bumping into far less competition if we're buying. There are definitely some sort of German core managers around, I think, buying high quality core income with indexation. The core plus value add side of the market for the smaller lot sizes is still liquid, but far less. Before, you're bidding up against 15, even 20 parties in a transaction. Now it's more like 2 to 5. So it's a big change in the market.
Okay, good. And from your side, I mean, Rogier, have you changed what you're financing, or in terms of financing has plainly got more expensive, interest rates have gone up, but has that led to a change in terms of your policy there at the bank?
Our focus has not really changed, but the demand has of course changed. We see, following change legislation around residential, now less demand for loans on residential developments and investments. It's not that we don't want it; we are still very keen to do it. Obviously, the focus on ESG is much larger, and this is first of all a value protector for the future, and a letting criterion. And we see also in all asset classes capex increasing in the future due to necessary ESG measures. So that's not really new for us, but it definitely gained importance.
Okay, good. I'm going to come back to that ESG point in a minute. But you mentioned there residential, and I know there's some interest, particularly in residential, from people here in the room. And I think, Simone, there's some. I mean, I've been reading a little bit about regulations coming up that may well affect residential, and obviously residential is also challenged slightly by the increase in construction costs and those kinds of things from a development perspective. But maybe just highlight some of the sort of regulatory changes that we're seeing.
Yeah, as Rogier already mentioned, the demand is not very high at the moment. And that's also because of some new regulations that are just introduced this year. It's called purchase protection, and that basically means that for real estate investors, if they want to buy residential units, and they are vacant at the time of acquisition, that it's not allowed for them to rent them out for at least 4 years after the acquisition. So that's something that we are focusing on, and a lot of investors are struggling with it because the municipalities have to implement the regulations in their municipality, and they are within boundaries free to implement it in a certain way. So they can apply some exemptions to the regulations. For example, Amsterdam did that. Amsterdam has an exemption that if you want to buy a residential complex, then the purchase protection doesn't apply. But some other municipalities didn't follow that example of Amsterdam. So there are also municipalities who just, implemented the regulations without any guidance or so for many investors investing in other municipalities other than Amsterdam and Rotterdam, it's very difficult to assess whether it applies or whether it doesn't apply, and that specifically is for the smaller complexes that are being sold these days.
And I think it's important to add that this is an important element which is already there for quite some time, hanging over the market. But just before summer, it was announced by the Minister De Jonge, who is responsible for, amongst others, the whole residential market, that they will regulate the mid-market rent as well. Yeah. So while in the past it was only social housing that was regulated, they will now also step up and regulate the segment, say, between 750 euros and 1250 euros, which is also related to the square meters of an apartment. And that is going to be, in our opinion, that's going to have serious, very serious impact. And that's what we already see now, that almost all residential processes, investment sales processes that were in the market have been pulled over summer. So the market is really, really harmed and coming to somehow a standstill. Developers will not start construction because of high construction costs, but also because they don't know what the regulation in the end will be. And that's something that's hanging over the market. It's still not clear what that regulation will be, but if it is the way it has been announced, then there is very serious impact because, for example, in Amsterdam, these mid-market apartments, they are rented out for, say, 1,800 euros a month. And the new regulation will bring it down to 1,100, 1,200 euros a month. So there's a serious decrease in rent, which is a serious decrease in value. So from all perspectives, this is going to have very, very serious impact, and nobody knows yet what exactly it will look like. So
James looking very happy that he's only in logistics at the moment.
Yeah.
I wanted to add the third rule, which is coming up in 2030. It's mandatory to have, I think, a D label or better, which means, especially on the old stock, that significant investments have to be done. So I think when it comes to the De Jonge proposals, I think it's very important to have clarity. At the moment, it's actually very difficult to calculate returns. And we know from the past that once there is clarity, it's easier. And indeed, the construction market, especially by developers to hold, has come to a standstill. So what we are actually waiting for is more houses. And at the moment, cranes are slowly disappearing.
Yeah. Yeah, another interesting statistic to add there is that in the Netherlands, 34% of total residential is social housing already. That's one of the highest numbers in the world. And almost 70% of the total residential stock is regulated already from all other perspectives. So in the Netherlands, this is a pure political thing that's going on. Because if you look at the market from an objective point of view, it needs a little bit less regulation, it needs construction. And that's what we see obviously in Germany and other countries as well. There is a political discussion going on that the market must be regulated because investors have too much or too high returns. Well, if you really look at the fundamentals, it's already extremely highly regulated. 34% social housing is huge.
And is that putting people off things like, because there's been quite a big focus. I mean, we've been writing about it a lot in Impact magazine, for example, on affordable housing, those kinds of things, very much necessary in the Dutch market as well. Is this having a sort of negative impact on those areas as well?
Well, the interesting thing is that it is necessary up to a certain extent, because the affordable housing, the social housing is already there. So what we need is mid-market, and even a little bit maybe above that, because the people that are now living in social housing stay there. I mean, they live there for 20 years, they just don't move because there's no supply above the social housing segment. So if you really look at the fundamentals, I mean, obviously we need more housing, more residential because of the growth of the population. But in social housing, we're already really, really well represented.
Okay, so it's an issue that the government really needs to be able to solve for there to be more investment and more construction to happen. Okay, that's interesting. Yeah. Picking up that point, Simone, as well, that Rogier mentioned there about ESG regulations coming up. How much of this, is that going to affect a significant amount of the stock, and is therefore, I suppose, transformation going to be the big part, as it is going to be a big focus here for London and a number of the big cities?
Yeah, I think that's definitely going to happen, especially offices. But also there are many residential properties who need an upgrade. We focus on ESG in almost every transaction. So not only in transformations, but also if there's a new building and the investor is or it's being presented like it's a very green building. We have the taxonomy regulation. So we focus in every due diligence whether the building is actually green. I think that's something important to note, that not every building is as green as they say it is. There's something like greenwashing going on. So that's something that we focus on, and it will, we see already a shift in investors only wanting to invest in green buildings. We have some new label regulations, from 2023. Every office building needs at least label C, otherwise you're not even allowed to have offices there. So that's something important, but I think that's, from a finance perspective also very important.
Definitely.
And that's from 2023?
Yes.
Okay, so that's very, very much on the agenda now.
Yes.
Yeah, we have been issuing many green bonds already since quite a few years. Obviously, we can only issue those in case we finance green buildings. That had a nice consequence, meaning that basically nearly all offices that we have been financing are already meeting that obligation. But it's I would like obviously to make an extra step in order to for a building to remain competitive and for an employer to remain competitive in the war for talent. We need attractive buildings, and the quality of houses in the Netherlands, for example, is very high. But I think we are still a way to go when it comes to offices.
Yeah, I think, in offices we have quite a significant office portfolio in the Netherlands, and in 2023 there will be a C label needed, and 40% of the offices has a label above C still today in the Netherlands. 31% doesn't even have a label, and 9% is above C. So that's, 40% of stock needs significant capex probably over the next months to come. So, and if you are not compliant with this regulation, you will have a fine, which can be very significant, and they can even close down the offices in a while if you don't comply within a certain amount of time. So this is going to have some impact as well on office valuations, I think, or for certain offices at least.
And what have you been doing there at Schroders with the portfolio in the Netherlands? is this something where you've been acting over a period of time already to be able to meet those needs? Are you selling some that don't and buying others? What's the strategy?
Yeah. Well, in the Netherlands, as Schroders Capital, we are mainly focused on city locations, train station locations. So almost 100% of the portfolio is located on train stations. It has an A or B label energy. So we always make sure that with the redevelopment that we carry out ourselves or has been done before, there's an A or B label already in the offices. We focus very much on healthy working, strong catering services, so that we offer offices where people can really work, want to be. So we have a certain concept behind that, the operational excellence concept actually, where we try to operate our offices in a certain way so that it's interesting to be there. And also from the sustainable perspective, of course, we make sure that we are working towards A labels for our offices as well.
And James, that's obviously going to be important. I mean, it's been of growing importance in the logistics side for a little while, both in terms of being able to generate power from PV cells on the roofs, but also because of the difficulties in attracting employees, a bigger focus on wellness and those kinds of things. How do you see that? Is that for you around the resilience of the asset as well when you're looking at it? Are you specifically looking for, okay, I'm only going to buy assets that meet these criteria, or are you looking at assets where you think you can also bring those up to standard? What's the strategy?
Yeah, I mean, our strategy really is buying existing stock. I mean, look, we own 250,000 square meters in Netherlands already, with 15, 16 assets, and they're all a mix of dates and ages and specifications. So, look, I think, we see ESG as a huge challenge in the logistics sector, especially. There's a lot of older stock, and how do you get them from, X to Y, and obviously regulations are changing as well. And I think, financing is an issue as well. Banks are requiring minimum baselines. So, but we see taking older assets and improving them as an opportunity, and repurposing them and making sure that they're invested in with all the things that you need to invest, like LED lighting, gas-fired heating, going to sort of air source heat pumps, et cetera, et cetera. So, everything that we've bought to date in Netherlands, we've underwritten quite a large budget to take them from X to Y in terms of where they need to be for energy labels and everything else.
Okay, good. I wanted to just pick up a little bit on some of the kind of key sectors. So we've done a little bit on office. I'll come to logistics in a minute, James. But I just wanted to pick up what's happening in terms of retail at the moment. Let's start with you, Pieter, maybe. And also any thought on hotels. I know there's some people interested in hotels here as well. So I suppose, what are you seeing in those sectors?
Well, retail in the Netherlands still is obviously a difficult sector. The grocery anchored retail is still performing really well. And we still see interesting transactions. Yields are rather stable still. So that's still going well. However, the high street retail and all the other retail is still suffering very much from the increasing, of course, e-commerce markets, etc. And so that's where sometimes some interesting opportunities arise. In the smaller villages, in the smaller cities, we see the old retail streets disappearing. So those will have to be redeveloped or used for alternative uses like residential or something like that. That's an interesting strategy. However, if you want to convert most of this retail into residential, prices are still not low enough to be able to make an interesting business case out of that. So retail continues to be very challenging, I think, in the Netherlands. But obviously at the AAA locations and the grocery anchored retail is rather stable.
Okay, good. And what about the hotel side? Obviously there was a lot of discussion, there was capital being raised as well for hotels across Europe on the basis of a bounce back from COVID. What's the situation there in the Netherlands at the moment? Has there been a recovery?
as far as I'm aware, there is definitely a recovery going on, and especially in Amsterdam, The Hague, the bigger cities, you see, like in London, that room rates are increasing significantly again. There's very little, there's very high occupancy. So the hotel market is, I think, recovering. However, also for the well-positioned hotels. So it's not that the entire market is back where it was before COVID. Definitely not. So in certain segments, especially in the mid-market segment, it's very challenging for certain hotels. The high end is really doing well. Lower end of the market is also doing well. But in the mid-market, there is still, the occupancy is not there yet where it was.
Okay, good. And are you seeing more requests in terms of retail, hotels? What's your sense of that, Rogier?
The number of requests at the moment on both sides is actually at the moment pretty low, and we have been financing quite a lot of convenience retail over the past years, and that is indeed performing very well. We have to be careful because, of course, e-commerce is now also accelerated by an all-time consumer confidence low, and it's interesting to be seen what's going to happen in there. The inner cities offer, of course, a lot of opportunities, but also a risk. I'm convinced, and we've seen that during COVID, that the inner cities, the historical cities, remain very popular. But it is to be seen how much rent will be paid over there. And as Pieter already said, many of these properties offer good opportunities for redevelopment the moment the price is right. And what we also have not seen yet, which is also, of course, going to change in the future, which well expected to change in the future, is that tourism from the US and China is coming back, because indeed the hotel market has partially recovered. The countryside seems to be doing well, but the business hotels are still behind, and let's say the global tourism hasn't yet picked up. So there are definitely opportunities over there.
Okay, good. Let's pick up a little bit on the logistics side. James, obviously you're looking across Europe. You mentioned a couple of things where you see, the Dutch market as being attractive. But specifically from a logistics point of view, what are you seeing? Are you seeing more interest in, because of the port side of it? Is it big box? Is it smaller logistics? Is there a crossover between industrial and logistics? What are you seeing there? And I'll pick that up with you, Pieter, as well, because I know that you've got a logistics strategy there as well.
Yeah, I mean, look, the trends in the Netherlands from a logistics perspective are still extremely positive. I mean, the Netherlands is a really, really important market in terms of European logistics anyway. You've got the Port of Rotterdam, dense road network, good transport infrastructure and dense population. And I think, what we're seeing at the moment is extremely low vacancy. I think vacancy rates are almost sub 2%. Large rental growth pushing through at the moment across all of the logistics markets and key locations in Netherlands, double digit. Increased demand. I mean, the demand is still going up and supply, it seems, can't catch up. Why is the demand going up at the moment? I think, everyone's heard about e-commerce. That's obviously a big driver. Then there is sort of disruption in global supply chains, meaning that a lot of the warehouse occupiers are having to adjust the way that they store goods, which is meaning a kind of shift from the sort of just-in-time to a kind of just-in-case, storing more inventory, which increases demand as well. So, but there's a few large trends at the moment driving the logistics market, and we see that continuing in the sort of near to medium term. We're very, very confident about rental growth. Building and delivering new stock is just getting more and more expensive. Land is difficult to secure. Greenfield development is becoming harder in Netherlands for sure. And if you want to develop in the key logistics markets, if you want to develop in Randstad, Tilburg, Venlo, becoming harder, and you'll start to shift towards brownfield development, I guess, which is even more expensive than greenfield. So, all things are at the moment, noting some of the macro weaknesses, at least from an occupational perspective, still very, very strong in Netherlands for logistics.
And I'll come to you in a second, Pieter, but Simone, just on that point there about, the difficulty in terms of development, obviously across Europe, here in the UK as well, quite a negative view to logistics in terms of planning and development. What's the situation there in the Netherlands?
Well, it just came in this week. Today there is a debate in the lower house about the many distribution centers that are being built in the Netherlands. They a while ago they put a ban on the development and realization of data centers. These days it's only allowed to build data centers on 2 locations in the Netherlands. And there's some political party that actually wants to do the same thing when it comes to the distribution centers, because they are afraid that too much land goes to the development of these big boxes instead of resi, something like that. And he's asking the question: do we really want to be that country where there are only boxes on the sides of the road? And so there's nothing specific yet. There's no legislation yet. But they are talking about it in the lower house, whether we should do something about, all those boxes coming along.
Well, there's got to be there should be space, because I think I read about 2 months ago that they're removing nearly a lot of cows from the land. so that should free up a little bit of space, perhaps. Pieter, interesting to get your perspective on that, especially also, I suppose, the relationship between light industrial there, which gets talked about very rarely, and sort of the full-on logistics side.
Yeah. No, I mean, it's very interesting. Like James already said, and Simone, I mean, the logistics light industrial sector is performing still rather well compared to the others, relatively, of course, because we see increasing yields and etc. But at the same time, especially this political discussion, again, the Netherlands is regulated entirely, as you can understand almost. Every sector is being regulated, even the logistics sector. But one of the outcomes of that is that the scarcity of land is going to increase. And that's something we already see now in the land values. If you have the valuations coming in, as per the 30th of June, land values are increasing, because the land that is available for development in logistics is so scarce that the prices are increasing, which obviously is interesting for the fundamentals of the valuations of the existing stock as well. So, and some cities already are having the regulation that you can only get the land if you are an owner-user. So developers don't get the land anymore. They cannot even participate in the tenders. So you have to be an owner-user, which is also, of course, interesting for the market, because it may be a good thing, but for developers it's getting more difficult to get their hands on the right piece of land, etc. So another interesting aspect in the logistics sector is the extent up to which you can apply inflation correction. Because as you may all know, in the Netherlands there is the CPI correction incorporated in all rental contracts, more or less. In the past there were little caps in those contracts. So now we see 7-8% inflation correction. In residential, that's something you can't do. In retail, it's too difficult because the tenant simply can't pay it. In office, it's the same. Some can pay it, some cannot. But in logistics and industrial, it's, literally almost every tenant pays this inflation correction. So rents are increasing with 7-8% this year on average, I think, in the Netherlands, or maybe it's on average a little bit lower. But so that's all these kind of things. Well, then in the logistics sector, it helps to remain it all at a very stable path. Yeah.
But it sounds as though from that if there's already relatively tight supply, it's going to be very difficult to develop, or increasingly difficult to develop. Yeah. Then, irrespective of some of the short-term economic issues that may come up, then actually if you're a holder of the existing stock, then that's going to be a positive opportunity, really.
Absolutely, yeah.
Good. I wanted to pick up a bit. I mean, we talked a little bit about office, but what's happening in terms of work from home? I mean, obviously, office leases are for a relatively longer term, so we may not see some of this coming through. But is that going to have a sort of medium-term, longer-term, lasting effect on the demand for office space? And also within that, I'd be interested to pick up, Pieter, I don't know, or Rogier from you on. There's a growing interest. You mentioned data centres there, but life science here, we're seeing life science in the UK moving into areas like Canary Wharf, which you wouldn't have expected. And that's a sort of subset of office in a way. Mm-hmm. So it'd be interesting just to pick up those kinds of points on whether we're seeing, office beginning to change to meet different demands as well.
It's interesting. It looks a bit like home working is stabilizing at the moment. The larger the company is, the more institutional the company is, the more home workers they see. And of course, the most institutional company we have is the government. SME employees have been working in their offices already since the beginning of the pandemic. And as said, that seems to be stabilized. So this basically means that demand for offices is decreasing. But as I just said, also a lot of investments have to be made in those offices, and it might as well be that offices in general, the core offices, might become more expensive, and a larger piece of the stock may become obsolete simply because it's not rewarding to invest sufficiently in an office building on a B or a C location. So the focus on quality is gaining importance, and which allows for a slightly smaller office market. Obviously, the use of offices is changing, which is an open door. So when it comes to surfaces, obviously tenants are asking for more meeting rooms, and I saw a tea bar last week, which was really nice. So it's a shifting market at the moment, and taking into account the ESG investments which have to be made, prices might have to increase. So stronger focus on that one.
Okay, good. I mean, it's interesting the idea of there being offices that will no longer be there, because obviously, was it 10 years ago when there was the huge issue with offices more generally, and we had a discussion here where one of the very honest views about the office market was that it was simply under-demolished.
Yeah.
was the quote from it. So Pieter, I mean, what do you see in terms of the office side? Do you think there's going to be a change? Is that an opportunity for transformation, either to transform the office itself or transform it into residential or other use? What's your sense of the office market?
Well, I fully agree with Rogier. Like I said, I think there's a strong focus on the good locations, on train stations, etc. We in our offices see an increasing demand for example, from multinational companies, big companies, who establish local branches on train stations. Like they, for example, have the head office in Rotterdam. They now have a little branch in Amsterdam, in the north of the Netherlands, in the east of the Netherlands, so that their employees can work from home, but also go to a local office. So from that perspective, I think those locations will always be there, and even the demands for these kind of locations will increase, because you have the facilities there, the catering services, the flexible office space, the train station, all the public services, etc. And on the other hand, indeed, on secondary, tertiary locations, there is going to be an interesting challenge. If that's a redevelopment towards residential, there has been a lot that has been redeveloped in the Netherlands already into residential, and not all those locations will be able to facilitate such a redevelopment. Maybe there can be some light industrial or whatever, but it is a serious redevelopment challenge, I guess. Yes, coming up.
Okay, good. And there seems to be a big focus in general on the sort of core elements. So does that mean also, if we look towards locations, that really the investment appetite at the moment is mainly for, the Randstad, essentially, the big cities and core locations within that?
Well, we calculate in the Netherlands in euros per square meter, and in order to be able to offer the right building, you need to be able to ask, just to give it a number, at least 220 euros per square meter. That means that if you can't get such rent level, it doesn't reward to make the investment, and that makes those offices obsolete or under demolished still in some cases, which means that you can actually only invest on those locations where you may be able to ask such higher rent levels in the future. And that is often in the Randstad or near railway stations, as Pieter said.
Okay, good. And James, obviously logistics is slightly different by its nature, because you're wanting to be able to access the whole of the country in a way. But do you have a specific view on the locations that you're looking for? Does it have to be close to those major cities?
Yeah, for sure. I mean, our strategy is very much focused on areas where there's dense population. So obviously to the north of Netherlands, there's lots of fields and not so many towns. So, all of our holdings at the moment, we've got Rotterdam Port, half of the rest of our portfolio is in Randstad. We've got markets like Tilburg and Venlo, so we're very much focused on location for sure. Okay,
good. Has anybody got any questions? Feel free to shout out or raise a hand, and we'll make sure that we answer them. And indeed, anybody online, if you've got a question, please do. I wanted to just pick up on one thing. If we're looking towards 2023, what do we see as some of the bigger trends? Obviously, ESG we've already talked about. If you look at any of the sort of investor appetite surveys, there seems to be a big focus on yes logistics, yes residential, or living, let's say, including senior housing, healthcare, data centres, obviously slightly more challenging in the Dutch market, life sciences, those alternatives. So is that an opportunity in the Dutch market? I mean, obviously for life sciences, very big centres of excellence as well there. Is that an opportunity, or is that really just kind of a niche opportunity in terms of what you're mainly seeing in the market?
Is it a niche? It is still a niche. I think the market is not big enough to call it mature, but it is still a very interesting one, and it is growing. And we just picked up the matter of price and location, and obviously it enables landlords to ask for a higher rent level. So it may also be a very rewarding asset class. So it is also one. Also for us, it's a niche. We do have some exposure. But this is not the key market where everyone will be focusing on. I don't believe that.
No, I think it's what's going to be interesting is to see how the residential market will develop in 2023, due to all the topics we have discussed, regulation, etc., rising construction costs, and that's going to be very interesting because we already see now that prices are going down quite significantly, even in Amsterdam. So everybody's like waiting. A lot of projects are not getting started. So will there be more scarcity as a result of that as well? How will interest rates develop? Obviously very important for residential with the low yields. So that combination, already today I think some investors are looking into the market again because they can buy maybe at 10 to 20% lower prices. So if you have a very long-term view, you buy now and the regulation will be less than expected, you may do an interesting deal, but if not. So it's going to be very challenging from that perspective. I think it's one of the, great questions that we have for 2023. How will the residential market develop? For logistics, I think there will be good performance and everything. And for office and retail, it's volatile, but I mean, it's interesting. But for residential, I think, that's the interesting one from my perspective.
Okay, good. That's a good topic. So why don't we just pick that up with everybody else, just in terms of challenges for 2023 going forward? What do we see as the key challenges in the market? Let's start with you, Simone, on that.
Well, I think we've discussed that point. I think it's merely the regulations that the government is trying to impose, and If there will be a ban on the distribution centers, that will be a huge problem. We have already a combination of things that are affecting the market. We already have the interest rate that is increasing, the rising of development costs and the construction costs. And it's also now, there's a ruling about constructors who can, break open their contract if the construction costs are rising. So even if they agree upon a fixed price with a developer, they are now able to renegotiate the price because their costs are higher. So that will mean that the cost of the developer will be higher, and the developer needs to renegotiate the price with the purchaser or maybe the end user. I would say that challenges are regulations I would say that.
Okay, good. Rogier?
Probably depends on your yield requirements and horizon. The market will require a lot of entrepreneurship since many buildings will need to be upgraded. If you're looking for low risk, low yield, I believe the regulated sector of the residential market is the place to be, because that's the one where there's actually already clarity. You know what you get, and obviously there is an opportunity because there's no lack of demand. If you're willing to take a bit more risk, then it's still rewarding to invest in maybe even cold land, which may be developed to RISI, because the shortage is not going to be solved within the coming 10 years. So it's still RISI, and it's depending on your yield requirements how you do it.
Okay, key challenges, and we'll also then just to round off do opportunities, and then we'll finish on an opportunities. Oh yeah, sorry, yeah, question, yeah.
To Simone. Question to Simone. Do you think that there will be any grandfathering in the talks about legislation of the expansion of the social sector? So if you have an apartment that is rented out today for 1,500 euros and it falls from the free sector back into the regulated sector, expanded regulated sector, do you think that the government, in their thinking, will propose some kind of grandfathering that the new rent can't be lower than a previously achieved rent? Or do you think that it's going to be brutal for owners and that the 1,500 will collapse back to 1,100?
Good question. I think that our Dutch government has proven to be very creative, and sometimes they even surprise us. So I don't know. It wouldn't surprise me if they would do something like that, because they have proven in the past that they can surprise us and they can do a lot of strange things, and they don't even always think it through. So for me it's hard to say, but it wouldn't surprise me if something like that happens.
Any other questions? Good. Thank you for that, though. That's an interesting point, because that would then ameliorate in some ways, some of the issues for certain. So let's just wrap on the opportunities. Let's start with you, Simone. Where do you see the opportunities? If I was giving you a large stack of investment capital.
Well, we believe that sale and leaseback transactions could actually increase the coming years. We have some 2 rough years with the pandemic. There are a lot of companies who still need cash, not only to maintain their operations, but also to improve it, to grow, and to innovate. So we believe that there will be a lot of companies that need cash, and selling your assets has proven to be a perfect way to create capital and to expand the business operations. So if I would have to pick one, I would say sale and leaseback transactions.
Okay, you can pick one or two, Rogier. You don't need to restrict yourself to one, but
Yeah, I'll make the combination again. I would definitely keep on investing in the residential market and use the dry powder to pick up some land opportunities for the future. And if there's some liquidity left, I would invest it in my properties and upgrade it.
okay, so an upgrade. Yeah. Okay, great. Peter.
Well, I fully agree. I think the residential market is going to be interesting and challenging. So that's probably where there will be opportunities. Also from the elderly care assisted living perspective, because the Dutch population is aging significantly. I think over the next 20 years, the people above 60 will almost double. So there's a strong need for new elderly concepts, and that's still lagging behind. So, but it's very difficult again because it's all regulated. It's more or less residential. So, if you have to develop, invest, you need to know what the regulation will be. So, but residential, elderly care, and other aspects, I think that's where the opportunity may be, but also the challenge.
Okay, good. James.
I'm going to say logistics, aren't I?
I thought you might.
Funny that. I mean, look, we see the opportunity for the next couple of years, and certainly next year, is in the sort of short duration income side of logistics. I mean, rents are growing, so that's a good way of sustaining your yield. And I think we've touched on ESG as well. So again, we see opportunity in investing in assets, improving them, enhancing their labels. So that's what we'll be doing next year.
Perfect. Thank you very much.